Today I'm going to be talking about CRISPR Therapeutics. CRISPR Therapeutics is a gene editing company which is currently valued at $3.6 billion and has a stock price of $43. Until now, I've been staying away from gene editing companies because it really is a different field to the small molecule companies that I've mostly been covering. However, I'm not going to be able to ignore gene editing any longer. It really is the next generation in biotech. And out of all the gene editing companies, it looks like CRISPR Therapeutics is leading the way. It may not be using the latest technologies, but its execution, the fact that it's already got an approved product, the financial stability and the partnerships that it has, probably makes CRISPR Therapeutics the main company in this area. Gene editing is about changing the genes of the patient to remove or replace the genetical errors that make the disease. Compared with small molecules that often just help with the symptoms, gene editing can be a permanent solution that removes the disease from the root. Ex vivo therapies have just started to be approved, and CRISPR Therapeutics owns Casgevy, which was the first ex vivo therapy to be approved. Ex vivo means that they extract the genes from the patient and afterwards they modify it before reintroducing it back into the patient. However, CRISPR Therapeutics and other companies are working on in vivo therapies as well. These therapies will be much faster and cheaper because they will update the genes inside of the human body. However, as you might imagine, there are more risks involved here, so it might take longer to get regulatory approval for this. I've separated this video into chapters, so if there's some parts that you aren't interested in, feel free to skip ahead. I think all of these chapters hold value, but it's up to you to decide. The first chapter is the bull and the bear points about CRISPR Therapeutics, followed by a cautionary tale about the industry. Then we have upcoming catalysts. I run through a discounted cash flow scenario. And finally, I finish off with some quick stats. So the first in the list of bull points is that Casgevy has been approved. So Casgevy was the first ever CRISPR gene-edited therapy approved by the FDA. It treats sickle cell disease and beta thalassemia. CRISPR Therapeutics has already given this to around 50 patients, and they expect that to increase significantly in 2025. Although no revenues have come in yet because of the long treatment time, we are expecting to see this in the next quarter. So next in the list is the impressive pipeline. And for me, this really is what sets CRISPR Therapeutics apart from its competitors. In this pipeline, they target type 1 diabetes, oncology, and cardiovascular disease. If successful, this pipeline could be worth billions. However, there is one drawback to all of this, and that is currently none of them are in late stage. All of them are either in IND, Phase 1 or Phase 2. This means that we are at least a couple of years away from seeing any of these in commercialization. Another benefit to the company are the strong partnerships that it holds. In particular, the partnership with Vertex, which has provided generous milestone payments and will help with the marketing and expansion of Casgevy. The main problem to this, though, is that a majority of the Casgevy sales will be forfeited. 60% of the net sales will go to Vertex. This is really going to hit the bottom line for CRISPR Therapeutics, especially considering that other pipeline products won't reach commercialization for another couple of years yet. Next in the list is the strong cash, a short-term investment position. At the moment, they are sitting on just under $2 billion of cash and short-term investments. This is really going to help them to fund their pipeline and marketing in the close future. That brings us to the end of the bull points, so let's go through the bear points. The very top of this list is that it's a highly competitive space. If we can click into here, I've got the proof here. If we open that, we can look at some of the other companies. This is the top 10 gene editing companies. CRISPR Therapeutics is number 1, but we also have Beam, Intellia, Aditas, as well as many others, but these are the big names within the market. As I mentioned before, it does look like CRISPR Therapeutics has the best shot here. Not only does it have an approved therapy, it also has a really strong pipeline, really strong partnerships, a good cash position, as well as one of the founders of CRISPR leading the way. However, it's still likely that this competition will come at a cost. And a further bear point to this bear point is that even when a company can get an FDA approved product, they can still fail. More on that coming up in my Cautionary Tale chapter. So next in the list of bear points, we have the high cash burn, and this really is very high indeed. Last year, they burnt nearly $500 million. This is one of the highest cash burns that I've seen in a biotech company. Once revenues start coming in for Casgevy, it's likely it's going to be many years before they turn net profitable. They have mentioned that they will hope to achieve this in 2028. However, in the last conference call, they didn't sound too convincing. So finally, in the bear points is the insider selling, and it looks like most of the directors are selling, but the CEO is particularly worrying. It looks like he's selling millions of dollars of shares every single year. Now, this is such a stark contradiction from someone who's going to conferences saying how much investor value they are going to be returning, to someone who's selling such a significant portion of their shares every year. For me, I'm finding this a tough pill to swallow when it comes to my choice about whether or not to invest in this company. So that brings me to the end of the bull and the bear points. Let's move on to the cautionary tale. So here is the cautionary tale, Bluebird Bio. So Bluebird Bio actually beat Casgevy in releasing a gene therapy for sickle cell disease and beta thalassemia. However, even though the company was able to launch the product and even start treating patients, in the end they ran out of money and had to sell the company for only $29 million. And this is the most shocking of everything. You would have thought the IP alone would be worth much more than $29 million. And for me, this is a big giveaway about the industry. This is really not so much about the technology as it is about the delivery of the technology. Just because you get a product approved does not mean that you are guaranteed success. However, CRISPR Therapeutics is a much different story. They have strong partnerships and the cash to follow through with their plans. However, that doesn't mean that someone bigger and better won't be able to come at a later stage and outdo what CRISPR Therapeutics have achieved to date. It's significantly less likely to happen here, but I think this is an extreme example of the fragility of this market. Whatever perspective you have on this news, I think it's important that we all should know about this story. So let's take a look at the upcoming catalyst for this company. First of all, we got a predicted date for the Q1 2025 earnings call. Or actually, I should say an earnings release, because they don't do an earnings call. And this is actually a new point that I added to the bear points, because they are quite low on news. They don't do the earnings call, and you normally only find out the new information once it's been released in a press release. Sometimes you get new information in their conference calls, but normally this is just the same information rehashed. So one thing I did glean from their last conference call is that they're expecting the in vivo clinical data towards the end of this year. And this will be something exciting for the company. I'm not sure how much it will move the stock price because it is early stages. However, I am hoping for good news here in their fight against various diseases. Next, I want to take a look at a very simple discounted cash flow. Here, all I do is look at their net income, and then I apply a discounted cash flow of 10%, and then I check to see the value of the company after 10 years. What I've done in this example is do the minus $500 million in the first year, and then I've added growth of 100 million per year for the next 10 years. This figure doesn't take into account corporate value, which we could argue would be around the $2 billion mark because of their cash and short-term investments. So theoretically, we could value the company in this scenario around $2 million. However, let's imagine that they can achieve a growth of $150 million per year for Casgevy. So we change this to 350 and then add that 150. Copy that across. Okay, so we can see even under that scenario that they still don't reach the current valuation of the company. And bear in mind that $150 million growth per year is net profit. So in total, Casgevy would have to grow at a rate of $375 million profit every single year for the next 10 years. Now, this is really already quite a high demand. And I think what this shows us very clearly is that this company is already being valued on its pipeline. And I'm not saying that's a bad thing, because that pipeline would be incredibly valuable if they just get a few of those products across the line. And if they do get them across the line, then they're not going to have to share those profits with another partner. As I stated before though, they're not going to get to commercialization for at least another 2, probably 3 years. So what happens to the stock in the meantime is anybody's guess. It's heavily undervalued if that pipeline succeeds. So if you have faith in the pipeline and you're willing to wait, then this certainly seems like a great company for investment. So this is a new section in the videos that I'll be making from here on. Let me know what you think about it. So when I do my research, I always include some of the same resources. And I've linked to all of these here on the main page for the Ticker Taco stock. I'm just going to go through each one quickly. The first one here is the investors relations for the company. And this is where you can find the corporate presentation, which is where I got a lot of my information for this video. Here we have a link to the StockTwits forum. Now this is great for finding out any recent news and current sentiment about a stock. Here we have the stock chart, and it also provides some foundational information about the company. For example, this is where I found out the market cap, which is now 3.7 billion. Here we have the financials. We have articles here. This is really good for getting a history about the company. We have earnings calls here, but as I mentioned before, they don't have earnings call transcripts. So I wasn't able to find out much information here for this company. However, they do have the conference calls, which have been very helpful. So we have the SEC filings. This is where I found out the information about the heavy insider selling. But you can also get things like their 10K and their 10Q. We have analyst ratings for the company. This is not something I spoke about before, but we can see here that there's a 75% predicted upside from the analysts. However, I always take the analysts with a pinch of salt. You can see here that they often just put their prediction just above the stock price. We have institutional ownership. Now this can be really important because the institutions normally have the most information about these companies. So if you see a high percentage rate, then that's normally a good sign for a company. You can see here that this is around 70, so that's quite a solid performance for this stock. We have insider trading. Now you can find this from the SEC filings, but what I really like about this is that you get a graph of how much selling is done each quarter. And then you also get a really easy to read list of sales by the insiders. You can see here that the CEO has made lots of sales around the $1 million mark, and that's just in the last year alone. We do have a buy here from one of the directors for around 300,000, but it's significantly dwarfed by the other sales. We have short interest in the stock, and we can see here that that's quite high at the moment, although not the highest that it has been. This could mean that a significant bounce back is due if the stock were to rise quickly. And finally, we have the earnings call calendar. And this is where I got the estimate of May the 6th for the next earnings report. Cool, I hope that you can find this page helpful for you. Please subscribe if you'd like to see my future videos.